Hey traders, Raghee here on a very volatile day. Yet another day that the breach, retreat, and our hourly price movement ranges did a great job guiding even a day as wonky as this one. Let's go through the breach, retreat, and the hourly price movement ranges known as the HPMRs on this chart. So first of all, we're looking at the ES, and the first thing to notice is, and this is a very important thing because I know some folks are interested. Rog, do you buy at the lower end and short at the upper end and buy at the lower end? No, that's actually what I do. I think the first 30 minutes after the bell rings between 9:30 and 10 is actually a pretty good time to think about fades. If there is a time to think about fades, it's much more so in the early part of the day. So you're really looking at fades, say, in an area like that. Let me paint that green because that's how we do these things. And then I would also look at this area in here. So these are the hourly price movement range lows. So earlier in the day, preferably between 9:30 and 10, maybe a little bit after 10, fades are okay. They're aggressive. They're always going to be aggressive. Anything that you trade against the larger bias of the market is generally going to be aggressive. Now, how do we determine bias? That's a process of the breach indicator and the anchored volume weighted average prices. So once we head up into the upper end of not only the area of the clearing range after the breach and the hourly price movement range exhaustion, you can see that's where this market ran into resistance right in here, this red box, which is the 10 to 11 o'clock hourly price movement range. Why is this important? Because we already breached to the downside. That's like the market sort of tipping its hands. You get to see its cards. You're like, okay, that's the direction where there's a little bit more bias. Once we start to establish a little bit more resistance below the VWAP lines, it's easier to remain bearish. And on those days that we have an initial balance breakdown or the 60-minute high-low breakdown and we continue lower, it just makes it that much easy to say, look, the lower hourly price movement ranges are our targets and the upper hourly price movement ranges are our entries. We want to short the upper end of the range and then take profit at the lower end of the range, with the bias being to the downside. So we could see this across the board, and this is a great way for once the market starts moving to be able to keep up with it and gauge it. So sometimes the market doesn't come back to the VWAP. Sometimes it's very choppy within the wave, but we know the bias is clearly down, and we just use the hourly price movement ranges to sort of guide our way. Even with dramatic news that we got that the U.S. is considering limits on the U.S. portfolio flows into China, that definitely soured the mood on most of the day. And you can see exactly what happened here. So these are levels, the clearing range levels, the breach levels, the retreat levels, and the hourly price movement levels along with the volume weighted average prices. This together gives you an unbelievable edge. And these are levels and these are tools, all of them, that we make available free to members. So if you're wondering, okay, Rog, how do we get this? Where do you get this? We do this live in the chat room every day. These are free to members, okay? So just something to think about if you're wondering, how do I trade these broader averages, crude oil, gold, bonds, the euro, yen, using these tools? That's how we do it, okay, gang? Enjoy your weekend, and I'll see you next in the update on Monday.